Get to
Peace,
it.
Sharif, right here with We Buy Black. We have a very, very, very special guest on this particular call with us today. And it's our brother, Tanen Andrews. And he has something, very special, something that we pretty much talk about a lot with We Buy Black. The need for us to work together, the need for us to build together, but to do it in a manner and in a way that is succinct, it's efficient, and it's effective. And our brother, he's here representing his company, Consumer Cooperative Group. And he has a methodology that he's going to speak about, something that he believes that can help take our community to a whole nother level. And I want to make sure we give him the proper credit and the proper time. And then also I'm joined by Jensen, also with We Buy Black. So, you all be seeing her a lot more too. But welcome, our brother Tanen. How you doing, man?
I'm doing good, man. How about yourself?
Man, excellent, man, excellent. We here now in the fulfillment center, trying to crank some things out, make sure people get their products and everything like that. But I was the first person that mentioned about your company to me was Lamar. And he was super excited. He kept mentioning, he was like, yo, check him out. He got something amazing going on, etc. And of course our team already wrote the blog on your company, but I want to make sure we give you the proper time to really explain what you got going on, so that everyone who's listening to our channel and everyone that's involved with the We Buy Black movement can know exactly how they could get involved.
Okay.
So I want to open it up, man. First, tell us about the company. Tell us about what you represent. Tell us about the methodology, and then we'll start there. Then I got some follow-up questions, and I'm gonna get into your life story and all of that.
Okay, that's good. Yeah, that's good. Well, the company, Consumer Cooperative Group, is a cooperative. And a lot of people might not know what a cooperative is. It's the original form of business entity prior to corporations and LLCs and whatnot. And the cooperative is in its purest form for the people. That's because people produce products, services, and they exchange them amongst one another. So that cooperative methodology has always been there. So what I did was I combined it with the corporation because of the stock component that a lot of us we ignore that. We ignore the stock component in everything that we do when we're creating companies. So a lot of us is creating companies and not really knowing what we're doing, and we always ignore that stock. But no one asks that question when we look at companies that are multi-billion-dollar companies raising billions of dollars, worth billions of dollars. No one asks the question: how did they start? How did they create that stock? Where did that stock come from? No one never asked the question. My 31 years, no one has never asked that question. I've looked at, I've watched gurus talk about your real estate, this and that, and company, but not ever has everyone talked about how you create the stock. How do you prep the stock? So what I decided to do was I said, okay, well, let's merge this co-oponomics together with the neglected and underserved market, because remember they advertise to us, but they advertise us in a way that we're operating as retail consumers. They never talk about the perspective of us being on the wholesale. So we always have a retail mentality. So the reason why I didn't do this earlier, because the laws weren't in place yet. Between 2012 and 2016, President Obama signed in the Jobs Act. And with that Jobs Act, if people might not know this, every time a law that is passed, there's always other laws piggyback behind it. And then no one never knows, okay, what else? This was passed when? Nobody knows that because they already got something that's at the forefront, the Jobs Act. So in that Jobs Act, it created crowdfunding, and it also created Regulation A. And what that is that gave small businesses the ability to issue stock directly to the people. Because prior to, you had to be what they call an accredited investor. That means you had to be worth X amount of dollars, or you had to make so much money on an annual basis to qualify to get involved with these startups early in the wholesale stage and get the stock at a cheap price. If you didn't, you would have to go through a broker. So the Jobs Act changed all of that. And I didn't know that this law was going to get changed. It was like I was all my prior work prior to it was like, oh, wait a minute. I almost like I tell everybody, man, I was about to have a heart attack. I'm like, what? I'm like, so I already had the mechanics down. So what I did was I created the company after I learned the process, and after me going over the process of studying how the mechanism works, the new laws, I created the company in 2017. Now you might ask, why did I create the company? Why did I use my pre-existing company? See, that goes again, how you create a company. You always want to create a fresh company. That's what I did, create a fresh company that has no history, no background, because I'm going to be issuing stocks. I need everything to be pure. You see what I mean? You want a clean, nice company for that specific purpose. So, Co-opinomics was created, man, it's probably 20 years co-opinomics. I've always had that terminology, but trademarking it and whatnot. But that is pretty much how co-opinomics came into play with the Jobs Act to create the company, so we can prep it in our current what we have is a current pre-IPO, which is what you do before you go to the IPO. It's called the pre-market. We get to do what they used to do prior to 2016. And now we don't have to use an investment banker. We don't have to use venture capitalists. We don't have to use the traditional methodologies that's been pushed on us prior to in regards to a business. Right. Now, with that is that now I come not just with the non-traditional aspect of it, I also now come with the education aspect of it, teaching you how to create a company, teach you how to create the stock, treat you how to wrap your intellectual property up before you present it out to the public. Because people may get mad at me. I think sometimes when I say this, I say, stop putting your talent before your business. Your business needs to be in the forefront, and your talent, which is your intellectual property, needs to be wrapped up in your business. So anytime that you do business with anyone, you need to be issuing that stock and not signing their contract where it's where they're taking over the rights of your property. Only way that they can have access to your intellectual properties is if you get into an agreement and you issue a certain amount of stock to them. So that's the importance of co-opinomics, prepping, giving people the opportunity to invest in a pre-IPO, a startup early at a wholesale price. So when we transition over to the public markets, such as the New York Stock Exchange America, they're able to, what do they call it, benefit from the price appreciation when we introduce it into the retail markets.
Now, let me ask you this. So, I'm familiar with what you're speaking of, and I think when it came to real estate, the first person that I knew that sort of had my mind, accustomed to this type of model was a brother by the name of Jay Morrison.
That's correct.
In fact, like he had called me one day. We sat down, we got some breakfast, and he was telling me of like what he's trying to do. and he mentioned, the Jobs Act, and I was familiar with it at the time. I was actually following it back in 2016. But let me ask you this, because I know people in our network, quite a few people in our network is familiar with what he's doing and has done. What would you say is the major difference, or the difference between what you're doing and then what he has already done, just so that may be able to help us understand even more?
Okay. Well, yeah, there's several things that's completely different. As I mentioned earlier about having utilizing wealthy man's tools. They advertise and market to us a lifestyle, and those marketing schemes are not for us. So in co-opinomics, we created what we call a real estate investment cooperative, which is a REC. That's our term. And what that does is that competes against these traditional financial vehicles that they market to the people, such as a REIT, real estate investment trust, real estate funds, such as the brother Jay Morrison created. Those are traditional models, and what you call real estate syndications. Now, the difference between the REIT and ours is that the REIT is like you don't have any control over the real estate that the REIT purchases. And what you're getting is you're getting what they call an APR, which is a annual percentage return, or what they call a right to a certain amount of money that's being generated for that. You see, so.
And when you say you talking about the investors, right?
Yeah, I'm talking about the investors in this REIT, in those traditional REITs, not the REC. The REIT, I'm describing the REIT. So in other words, people sit back and says, okay, if I put $1,000 in, and they do a dividend, right, and that dividend ends up being $10, and you just get that $10, you see you're only getting a fraction. You're not controlling the asset. You're only getting the rights to the money. You're not building generational wealth when you're investing in a REIT. You're only getting income. You see, that's the problem. They're only talking to us from one side of the spectrum, the one side of the ledger. Okay. And then you have someone managing it, and you see what I mean? They're taking fees and whatnot. And if you try to go and get that money out of there, you see, they would have to sell a whole property just to get your money, but you still don't get all your money back, because once they cut off all the fees and all of that and stuff like that, you actually get less than what you invested in. Now, let's speak about Jay Morrison's real estate fund. See, the fund, they have fund managers. You see, he gets first dibs to everything out of the pot. You see what I mean? All fund managers do that. And again, you bought into a right to receive a certain amount of money. That's it. No asset. Everybody's forgetting about the asset. Everybody's focusing on the money. What about the asset? C.J. Morrison, real estate funds, they're controlling the asset.
So if you're an investor, if you are an investor under the program that you're speaking of, then those who are investing have a say in which assets are being purchased, which assets are being sold, whether or not they're going to rent those assets out. Like you have some control on how those assets are going to be utilized. Is that what I'm hearing from what you're saying?
No, they don't. Now let me bring in the components from those other ones. See, we focus on what we call EPS, which is earnings per share. We issue equity stock. And I'm gonna tell you why that's different. See, that's why I was telling you about the stock component. That's the reason what makes it different from the other two. See, when you have equity, you own a piece of the asset,
right?
Not the real estate. You own the part of the cooperative that owns the real estate. You see, you have to create a separation So the stock is acting somewhat like a derivative, but it's not. But it's like a derivative. So in other words, the 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 asset, the real estate, the people own it indirectly through the co-op. So instead of owning the real estate, the stock serves as a piece of the individual portion of that value of that asset. You see?
Right.
The power in that is, we talked about Wall Street. Now, if we're going public and I register that stock and then it comes out and it has a value to it, what happens is they don't have to come and ask me for permission from that value. It's eligible to be used as collateral and deposit into a brokerage firm, just like you would get stock at a 401 in your 401k from your business. You see what I mean?
Right.
They don't need to come ask me for permission. They have an asset that is liquidable. Well, that will be liquidable once we're now they're not liquidable right now because we're in the building stages. But once we register those shares and we start listing trading, now that stock becomes their asset. It has value now. We just created another form of currency, another form of money that they can use. You see what I'm saying? Instead of focusing now, if you have that asset, guess what you have access to? Cash. You didn't just go after the cash. Now you have the asset that produces the cash. And the value from the real estate, as we purchase and keep acquiring, that value is going to pass down to your shareholding. That's the reason why you don't sell your stock. You use it as leverage, just like you do with your house. If you have the house and it's supposed to be your asset, right? You can always go and borrow against your house to get money. You can do that with the stock. You see, your wealth is determined by the amount of shares that you purchase early. And that's what and that's why you see a lot of companies and people that are multimillionaires, multi-billionaires, and they can consistently have access to this wealth because they have that registered stock. See, you didn't know that you could register your stock. You didn't know that you can deposit your stock, but you do know if you had a 401k or an IRA, you would understand that that's what they're buying. They're buying other retail value stock. And the only difference, well, what we're doing is you're having access to the wholesale aspect of the stock before it goes retail. That's the difference.
So I could Jensen, go ahead.
No, if you have a question on that, I want you to go ahead with that, Sharif, because I was going to ask a question about the educational component.
Well, that's actually the direction I was getting ready to walk into. So go ahead. You go ahead on it and lead that.
Okay, so that is the non-traditional portion, right? So now people have this opportunity, Tanen, to be able to own a piece of the actual asset. And in this case, we're talking about real estate. What is the educational portion of this? Because you mentioned you do non-traditional and the tenets of your things are the non-traditional and the educational. Do you teach people how to do this as well?
Yes, just the members. Yeah, if you're a member, you get all of this for free. This is no course that that's packaged up by someone else. No, this is my life experience, my life, everything. So, and also it's also all the tools that they're going to need. This is not superficial things like, oh, I can make you rich or I can do this. I'm like, no, instead of me telling you that, which I never tell anyone that, I show you how to do it. And that's the difference between me, our company, our co-op, and every other business individuals in our industry or any other industry in regards to trying to provide financial advice to people, is that we actually show them what to do. And to correct you on that, Jensen, they don't own the real estate. They own the cooperative that owns the real estate. See, because we're going back into that cooperative methodology, right? Mm-hmm. Is that, hey, hey guys, I got this co-op. You guys we're gonna buy this real estate, right? But first we got to form it. I'm issuing equity early. The little money you come in, that's going to help us form and build the foundation before, so we can position ourselves to get to Wall Street. And once we get to Wall Street, we raise the capital, and then we go purchase the asset. And see, and that's something that no one is teaching. People scare people away and think, well, wait a minute, you got to be a multi-million-dollar company to go public. No, you don't. You see, this misinformation, these lies, the stuff that scares people away from doing the work. No, there's work that's involved. You can prep the company. I don't go to banks and ask for money, give me a loan. No, I don't need your money to do that on that level. See, people go to the banks and do that. I'm going to Wall Street to get my money. You see what I mean? And there's a way that you go to get that. You see, they're writing the checks when you're fooling with the banks. When I go to Wall Street with my members and my investors, we write the checks. You see what I mean? Because we're putting the stock on the market to trade, and we're creating those jobs, and we're doing whatever. So that's part of the educational component, is to teach them from the inception on how you create your business, you give it a purpose, you issue the stock in exchange for the IP, which is your IP. You have to take your IP, right? Your thought processes, whatever you think, whatever you're going to contribute to the purpose of the entity, you're going to use that, and you're going to exchange that for the stock. That's how you create ownership in your business. And you set aside the other component of the stock to issue to the people, to raise that capital from the people. Don't raise the capital from venture capitalists. Don't raise the capital from banks. Raise the capital directly from the people, so they can benefit from the value appreciation when that stock goes to the retail markets.
Now, when you were speaking, when she asked you about the education component, you said that that's for the members, and you said this is my life, right? So I said, well, let's talk about that, right? And feel free to brag as much as you want to, right? We know that it's in a good space, but talk to us about that. Like, how did you get into this? Like, what led you to be into this particular field? So those experiences, and then was there any moment where it's like, aha, an aha moment where you knew that this is what you knew that this was like a call, and this is what the work that you need to be doing?
Well, real quick, 19 is when I started my first business, delivery. I was fortunate. I've always want business that's, it runs in my family. My great grandmother owned real estate, owned what they call juke joints in Georgia. So the business book, that's probably skipped over a few, and then skipped over my dad, and then came directly to me. So we talk about that and laugh about that. But I was fortunate to have a brother that was a real estate guy, right? And he taught me the basics, the foundations of everything, and he didn't charge me. So when I do certain things, and the members, they know, when they see this, they'll know I pay that forward. That's what the education is for, you see. But at the same time, if I invest in you, I need for you to invest with us, so that way so I can make available the resources that are not, so I don't have to charge you. You see what I mean? Because as we start growing, we're gonna need those resources. But like I said, I was fortunate to be blessed with that. My mentor, he taught me some foundational things, and for some reason I took it to another level. And at that point he said, look, man, you'd have outgrown me, because now I started getting into because what he was teaching me, I'm like, well, why can't you do it this way? Okay, why can't we get the people involved? I was asking him questions that he wasn't familiar with, right? So he was like, wow, so that was the aha moment right there. It's like, okay, he only knew this, but I'm thinking this. So then I started to search, started to do all this other things. And that's when I was reading about the financial markets, the real estate. I was buying real estate. I was getting the cash flow. I was doing it the traditional way, but I knew there was another way. And through those years, I was figuring that out, developing the models, developing everything, following the rules on the do's and the don'ts. In school at that time, but school doesn't really teach you all of that. It's just teaching you foundational, things about how to go work for someone. Nothing really in an entrepreneur style type of situation. But I think one of the other, like you said, aha moments, I had so many of them, learning about how finance works, how the bank actually works. What we think how the bank works doesn't actually work that way. A lot of that's been confirmed. Relationships I've had with presidents, vice presidents of different various banks, pointing me in the right direction. Go look over here. Banking publications. What's really going on? And I think one of the major things was when I found out that that the law doesn't govern money like people think it does. No, it doesn't govern money. It governs negotiable instruments, the paper. I spoke of that earlier about assets. If you're not controlling the asset, you're not controlling the money. If you're just spending money, you're just spending money.
Just a consumer.
Yep, you're just a consumer. And to get more money, you have to go back and trade time for money. So you can spend the money all over. So in other words, you're going back to your job, which controls the asset, which is the employment contract. You don't control it. They control it. The money is nothing but the numerical value that is stored within that instrument. You see, that's all it is. And if you're not controlling that contract, that asset, you're not controlling the money.
So you mentioned that you don't learn these things in school, but you also mentioned that you started real estate, or you started dealing in real estate while you were in school. What were you in school for?
Oh, business.
Okay, so you were in business school.
Mm-hmm. Oh, yeah. Oh, yeah.
Was there a particular concentration, or was it just like business?
Well, no. My undergrad, like I mentioned before, my undergrad was in computer animation and game art. My master's is in business and administration, and my other master's is in entrepreneurship and small business development. So these are just foundational things. A lot of the stuff that I learned in there that I was already doing. The only difference is that these people had put terms and names on these processes, but I never knew that. But guess what? We naturally have the ability to create these processes without even knowing that there's a name on it to take credit. You see what I mean? Like these systems, they take credit for something that we naturally do. You know what I mean? So
that's not a new phenomenon.
Yes, yeah. So
yeah, man, that's I think as I'm listening to you, I'm thinking like, well, if someone else was listening to this recording, they want to know how to get involved, essentially. Like how do people get involved? In fact, beyond just like interviews, like what are you doing to like kind of spread the word and get people involved? And I'm also interested in like knowing like the first group of people that you actually got involved. Like who was that first group?
Well, like I always got to always give praise to my parents. They were my first investors. Always, mom was first investor. Dad was first investor. Dad is still an investor. You got to remember, I taught them. My mom's no longer here, but but my dad is he's still rocking with me. So just speaking, talking for years. My wife I have to give credit to my wife for that. She told me she listened to me speak for years. So 22 years you've heard me speak. So she was like, you need to put that on tape. You need to get this on video quickly. You know what I mean? So it's like, so I didn't, because I'm talking to her, because he said, because you over here talking to me and I don't know what you talking about. So I started 2009 when I started putting it on. I started putting it on audio just to hear myself speak, and it took me years to create my own cadence of the information, how to articulate it, how to explain it in the regular sense, and then I had to learn how to recraft it down to a level to where it was in bite-sized pieces where people can understand what I'm talking about. You see, because I can talk all day and people not comprehend it. So I had to do that. 2017, when I created the company, going through the crowdfunding process, going through the manipulation. And then trust me, when the crowdfunding came out, a new set of manipulations came out. Okay, so and we'll talk about that. But reaching out to the people, explaining to them, and me finding out certain things. And the thing that I was finding out is that crowdfunding is not what it seems to the people on the outside.
What do you mean by that?
Is because when I was telling you about everything that was pre-Jobs Act, it was all about venture capitalists, and it was always about investment bankers. And the ideal marketing was to get the people's money. Now, I want you to pay attention to this, is that all money that these venture capitalists, investment bankers, all the money that they have is not their money. They getting the money from the people. I've had this discussion all the time. So, and I noticed this, and then I noticed how they were controlling what deals, what small businesses they created. Jobs Act created what they call these crowdfunding portals, and these crowdfunding portals are mainly being hijacked by venture capitalists in the background. So instead of using just the Jobs Act's methodology to crowdfund, they're using the methodology of the venture capitalists to vet out small businesses like mine that are reaching out directly to the people to provide those services. See, no one, if I didn't learn what I learned back in the 90s, 2000s, and 2010s up to this date, I wouldn't have been able to navigate. People wouldn't know who I was. People wouldn't know, they wouldn't know what this cooperative was, because I was able to navigate around that BS because I knew how to write my own security agreement. I knew how to talk directly with the SEC. I knew how to file my own filings. I knew the whole system and I knew the whole setup. Because when the Jobs Act was created, it created all these new companies with these businesses saying that they're the top rated this and the top rated this and that, and they can do this, they can provide these services. And I was like, well, wait a minute. Jobs Act just got created. How are you the number one in something that, and it's still in its infant stages, right? So I figured out it's a money grab. It's a money grab, and they're trying to market to people to take their to invest in something that has been rebranded, and that's our problem. This is something that this is part of that education. This is what we have to recognize, is that you have to recognize when a product is being rebranded and they're trying to get you to invest in something that's already out there. It's that what do they call that? What do they call that? The hamster in the wheel. They got you spinning through the hamster in that wheel. Same product, different brand. You think it's new. You think it's innovative. There's no innovation. What I'm doing is innovation. You know why? You know why it's innovation? Because I'm getting the people involved and letting them know that they're the creditor. They are the original source of the income. So instead of the crowdfunding blocking me from accessing the people and the people accessing the small business so they can make their choice of who they want to invest in versus them being manipulated into a choice. Oh, I can tell you some stories, but we ain't gonna go there. We ain't gonna put their names out there. That's in private.
Let me ask you this though, like, and it's kind of speaking to what you're speaking on right now. Can, like, for what you're doing right now and what you're doing for the people right now, could it have been done before the passing of the Jobs Act bill of 2016?
It could not.
Okay.
It could not, because they put classifications on retail investors, which was us. I'm not a retail investor. They put those classifications on us before. And when you have that classification, you cannot talk directly to a founder or CEO of a company without having to go through a broker.
So so the classification is the non-accredited investor.
Non-accredited investor. You can't access early investments in that company.
Right. Only
the people that make $300,000 or more, or has a minimum of $1 million in assets.
Right.
They're the only ones that are able to. That's the wealth gap. That's the wealth gap. We have 224 years of a wealth gap that we have to catch up, and the only way to catch up is to go to Wall Street. That's the only way. It's that wealth gap is created through stock.
Right.
You can check the history. You can see that. How these people got all this money? How are these people taking all these trips on these yachts all the time? What's going on? Right. This is not a money game. It's a paper game. I'm teaching the paper game.
So the goal then is not to keep a company private, but to take that company public.
That's correct.
So it doesn't matter how much you raise. I think, like, if you did, what is it? You could raise up to like 50, was it 50 million?
No, it's changed. It's changed. Under 506, that's just for accredited investors only. So whoever offers or does an offering under 506, they only can utilize accredited investors, and they can generally solicit to the people now directly, but just accredited investors. That's unlimited. Doesn't matter. Under the Reg CF, they raised it to 5 million. That's what we're on. That's what we're under the Reg CF right now. Right.
Remember, now we're 1 million, but then they raised it up to 5.
They raised it up. Yeah, it was originally 1 million. Now it's 5 million. So, and that's a power piece. That's a power play under their traditional methodology. Gotcha. Under the non-traditional, that's super powerful for us, especially because I know what we gonna do with that. You see what I mean? Which they're not telling. So now the next stage is the Regulation A. Regulation A, we can raise up to 75 million. It went from 50 to 75. Okay, we have a pending Reg A right now. I'm just getting everybody in on the Reg CF before we transition over to the Reg A. The Reg A is what Jay Morrison did. He did Regulation A. A plus. So I said, okay, well, no, I need to get my people together first before I move over. So so that's another difference, a difference between what I'm doing and what he was doing. I don't talk about the real estate. A lot of the people, a lot of the members and everything, I don't talk about the after effect of something. I don't market that to y'all. I don't say, oh, we're going to buy all this and we're going to buy billions of dollars worth of. I don't talk about that. Only thing I talk about is the work, the process, and how I'm going to prep you before we get to the real estate. Because if we get to the real estate and you're not prepped, what are you going to do? You're going to mess up. You're going to spend your money. You're going to get back. You're going to put yourself back in the original position that you were in before we got in. That's why putting in the work and the educational component, learning, watching my videos. We have workshops coming in, like Jensen, we're talking about. I got workshops that I'm going to be putting in on how to create your business, how to create your stock, not how to get into debt, not how to go and get a loan from the bank and all of that, because we all know that there's different categories and different levels of dealing with the bank, right? We have the regular folk where we go in and we talk to tellers, right? And then you got another side to where you got your own personal portfolio manager. And we did a video, and we had a webinar last week where I introduced our financial investment firm, Edward Jones, to our members. You see, I'm prepping them. I'm teaching them what relationships are. These are the relationships that need to be established when you create your business before we can move to the next, before we move over to the next level. I'm prepping them so they're not in that shock mode when we get to where we need to get. I think that's very important. The education, the financial education, the relationships, the process. What can I do with the stock? That's the number one question. What can I do with the stock? What is the stock for? They don't know. And no one is teaching them. Jay Morrison didn't teach them. Elon Musk, they don't teach you that. They just say, hey, here's investing. You can invest like a venture capitalist. That's all marketing hype. How you gonna invest like a venture capitalist? And you only coming in with $50, bro.
Yeah. I brought our brother Jay into this because, like I said, he was one of the ones that I knew that jumped right on it. That jumped right on this program, and I'm sure there's some things that he learned from it now. That he probably, if he could go back, he'd probably do some things differently. I think that's just the nature of business.
Well, yeah, exactly.
So, and there may be some things too that he may see in what you're doing that he may actually, say, hey, like that's something that we could incorporate, but really start. And I put his name out there because, as you mentioned, like what I'm hearing from you is a lot of education. And I know from when I mentioned, I said, well, you probably put in the framework and help us. We'll start from there because a lot of people, like I said, we even help. We probably even did a campaign for him or put it out there. I know that for sure. So some people had that limited knowledge and education on it, but that's like a good basis. So what I'm hearing with you coming in is just a whole nother level, of being involved, being involved legally. And then, so
it's
that's
important.
It's
important. And I feel for the brother. I feel for the brother because I've been looking and I've been seeing, man, the blowback from the people. But like I said, at the same time, I asked the people, what did you expect? Did you actually read the security document? That's the question. And I knew just based on some of the comments and this and that, I know that they didn't read the security agreement, and even if they did, they didn't understand it. You see, I'm like, okay, you put $500 in, right? What did you expect you was going to get back from the 500? So I think some people literally thought they was going to get $50,000, $100,000, $1 million off of $500. I mean, it doesn't work like that, man. I'm like, what he says and their perspectives are two different things. So, I saw everybody jump in when it was passed. I just sat back and watched. I sat back and watched. Because you got to remember, prior to, I was studying S1s. Thousands of S1s I've studied. S1s are the original security filings that a company would file when they're going public. It'll be an S1. I studied those. When the Jobs Act was passed, they created a new filing, which is called a 1A for small businesses that are getting ready to do a doing a pre-IPO. So when everybody jumped out there, I waited and I studied their filings. You see what I'm saying?
Sounds like one of the biggest issues that you realize that other people have been having is the piece that you're trying to bring, and that's that educational piece.
That's the portion of it, because that education component in regarding to the processes to doing what we're doing, it has to be implemented in individuals that are starting businesses, regardless if they're going to go public or not. And I explain this to the members now, that you need to, when you start a business, start it as if you're going to go public with it, whether you're doing it or not. Because you don't know at some point down the road that you might take that path. and your stuff is already together. You see what I mean? So, and that stock is the thing. And I had a brief conversation with a group on fan base, the Great Conversation. I give a shout out to my boy Unapologetic. I'm just gonna do that because that's my boy. He's got a good room there, and that's on fan base. When I was speaking in there, and I was speaking to individuals that are in some of the people that were in the music industry. And I explained to them, I said, don't showcase your talent before you structure your business, because you want your business to own the licensing rights to your IP at all times. So then that way, when you want to go that route and talk with a record label, you see, you're going in at a position of power because you don't own anything, the business does. You see what I mean? And it just blew their mind. You see, this is the type of education that we need. You see, because at the end of the day, Jensen, it's duplicating what I'm doing. Duplicating this. If I'm going public, I need you or the people who want to do the exact same thing to do it. And I'm laying that blueprint, for them. Because you got to remember, there's only one publicly traded, Black-owned, publicly traded company on the NASDAQ. One out of thousands.
What is
so you're gonna tell me you don't see I think it's TV1, Urban One, TV1.
Okay.
Urban One.
And it makes sense that the educational guy is the guy with two masters.
Well, see, this ain't master. No, the master.
No, and it has
the
nothing to do with the
comes from the
masters
It comes from the practical. No, it comes from the practical knowledge and experience in developing those relationships with non-government entities, government entities that you have to align yourself with when you're creating your company. Because remember, who is the first? And I know you know this. Who is the first relationship that you establish when you start your business? The Secretary of State. Who's the next one? The Internal Revenue Service. You got to get your tax ID number for your business. So remember, a business is a person. Remember, I was saying focus on the purpose, because the purpose is the brain that you're going to give to the business, which is that license to that intellectual property. You see what I mean? You have to understand.
He does webinars, y'all. He does workshops. You can
got to break it down.
All the information.
Yeah, because look at it this way. If these people are not talking like this, and I'm gonna tell you, it's Abdul, right? Amal.
Sharif.
Sharif.
Yeah, I'm Sharif. Yeah, Sharif.
Sharif. I'm sorry.
Yeah.
Sorry.
No,
I'm saying your middle portion. Sharif, just like you were saying, brag. I'm not gonna brag. I'm just gonna put it out there. These cats ain't teaching you, and they ain't teaching you about infrastructure. Mm-hmm. They ain't teaching you about sustainability.
Yeah.
And they're leading you with a lifestyle instead of the infrastructure. Man, y'all better run. You better run. Because it's a money grab, y'all. It's a money grab. If these cats is making the money that they're making, they wouldn't be asking you for none.
Yeah.
You see what I mean?
I feel you, bro. Like, and I've been in this space, and I'm big on relationships,
Yeah.
And I could say, one of the things that I've learned, just throughout time, and when you speak of relationships, this is like a big thing. Is a certain level of like gratefulness too, because really I've watched a lot of people, even in our own history, try to attempt some of the things that we're attempting, even in our own company. And I could look at a lot of them went wrong. Some of them made some mistakes. Some of them made some moral mistakes, right?
Yeah, but
but I always had the question, even if they went into it wrong, it gave us a framework of what not to do.
Exactly.
And really, like you said earlier, you was like, I don't talk about the real estate. I just do the work. I could resonate with me strong, because for me, especially as of late, I've been off camera because, a lot of times when you talk a lot on camera, like you said, there's a lot of personalities out there. You talk a lot you scrutinize more. So you get a lot of people. You can't walk on the streets without somebody recognizing you and knowing you. And hey, what's up with my $500? You know.
So that actually happens to him for real.
Yeah, I know it do.
But no, for me, I know what to do. It's a little different. It's not like we ask everybody to invest something. Right. You start asking people to invest something. It's not only are you going to be scrutinized by your own people, you're really under a new target group. You're really under a new target group. You're really under a group that's targeting you. And those are forces and entities that are not really present. See, our people, we know our people. We can see them. But then some people you just don't know. You just don't know what angle they're coming from. So I like where you are, because where you are is really where I think that leadership today needs to be. And it's sort of like in the background. You can have somebody out front. I think there's a way, there is a thing where you should have someone out front leading the group. But to have someone out front leading the group and not to have anyone in the back leading, that's a problem. And I think that the way that you are doing it is an excellent way, because leading from the back is foundational, and foundation should be built on knowledge, right?
Exactly.
Yeah. And he's leading with the work, leading with the effort, leading with the hard work.
Exactly. And I told him straight up, because if someone asked me, so, well, why you ain't already doing it? I said, well, you really gonna ask me that? I said, do you know what I'm doing? No. I said, then that's why I'm here. Because I tell everybody, look, I'm walking with you as we're doing this pre-IPO. We're doing something that's historic, that ain't never been done before, y'all. Someone teaching you the game on what we're doing and walking with you. I didn't just package something up and sell it to you and went away. No, I'm walking with you as we're doing, because I want to make sure at each stage that we take, you are understanding what is happening, what's going on at this particular point, because you're going to be duplicating this. You see what I mean? So you need to know each and every step of this. You know what I mean? When something happens, they know right off the rip whether it's good or bad. They don't like it. I'm like, oh well, that's what it is. So we got to move on. Don't harp on it. Let's move on. We got some setbacks. Oh well, that's what it is. Let's keep moving. You see? And I think a lot of that. I think.
Oh, go ahead.
Was that Sheree?
No, go ahead, because I know, like, when you speak, there's like a delay on my end. So, but go ahead though.
Okay. I think that's what the brother Morrison was getting involved with. He was more not being upfront, in a sense, to where you're talking, because he was talking about other things instead of talking about the work. He's talking about numbers. You say, I don't even talk to y'all in the intellectual way that I can because I would lose you. So I talk to you a way as is like how we're talking right now. We just talking. You see what I mean? Yeah. You ever heard me say any fancy terms? Have you? I'm just talking general terms. And see, that took years for me to develop, to do that, so I can reach, because what I've created was created specifically for our people to digest, specifically for them. This project is specifically for them. It's open to everyone, but at the same time, I have to focus on my people, because we're the ones that they call marginalized. So I don't believe that. You see what I mean? I just think it's just a lack of information being provided that is not shared. I share it. You see what I mean? Right. I don't charge anybody.
And I think it's pretty obvious. I'm sorry, I don't mean to cut.
What's that?
I was gonna say, I think it's pretty obvious that you mean for it to be for all people, because you can't go public and not expect all people.
Exactly. Well, see, that's the difference. When it's on the retail, it's out of our hands once it's on the retail. Right. You see what I mean? Just like when you manufacture a product to put on the shelf at Walmart, once you package it up in the pre-market and create your value for it, once it hits that Walmart shelf, that's retail. You can't control who buys the product on the retail market, but you can kind of do it here on the pre-market by catering to your group to get involved. And if they don't get involved, other prospects are going to come in and get involved, and and I'm not going to stop that. You see what I mean? Y'all get on board. I tailor it for y'all. This is for you to understand, and you have plenty of opportunity to get involved and position yourself. Okay, position. Because when I was running, and I don't want to get off topic, when I was running this on Fanbase, right, I was giving away shares, my shares, for free, just for them to get membership and free membership. So they can have access to the videos so they can learn. And when they learn and got comfortable and got in a position to where they can okay, I'm going to invest, then they can go invest. I don't come at you and say, oh, invest. No, I was giving away the shares so you can learn. So then that way you make the decision. I don't want to make the decision for you, because we're not going to have a repeat of what happened with the Tulsa Real Estate Fund with our people and stuff like that. I'm going to ensure that you have a certain level of understanding of where you're at financially and what we're doing, to where if you can come in at the minimum, and I got it at the minimum. Do you hear me? I know our people. And when I say I wrote it for my people, that means I left back doors in for them to get themselves in there, payment plans for them to get in on different social media platforms, participating. I'm watching if you're participating. If you're participating, okay, yeah, I'm going to pull them in. They're doing this, okay. You see what I mean? I know how we act. So I put those things in place for them. So there's two sides to this. There's a membership, and then there's the investment. Okay. One, you pay the money to get the stock on True Crowd, where we're doing our capital raise. The membership side,
True Crowd. I was
going to
use
True Crowd, and I'm gonna tell and I'll tell you why. Hold that question, and I'm going to tell you why I use True Crowd.
Okay.
And the other side of it is membership. If you get your membership in the co-op, guess what you get to do? You get to earn your shares through vesting. That means by watching videos, interacting with the videos, doing all of that. That's being recorded back there. Okay, you're earning your shares instead of having to pay for them. That's where you don't got to pay no money. You're earning them by participating, showing me that you're trying to learn. And those are all coming out of my shares, not the companies. True Crowd comes out of the companies. Memberships are donated to and earned through my shares on the membership side.
That's like a literal earn while you learn model.
There you go. It is an earn while you learn model. Because you can't come back to me and say, oh, Tanen, you can't come back to me and say, oh, Tanen, you did this. No, I didn't do nothing. I gave you an opportunity to learn over here. Remember this? And remember, you got these 600 shares, these 600 shares for free. Remember that? Oh, you already up. You're up before you even get started. You're already up.
Let me ask you this, Tanen. So it's two things, really. One, how do people who are listening get involved? Right, we know how they're going to learn more. They got a lot from this, but then two, we'll make sure we got the appropriate links following this. Yeah. But how do they get involved? Right, like what is the process for people to get involved? So just take a couple minutes and just let us know, like, how can the people get involved? People who are listening, people who are interested, how can they get involved?
Okay, but first I tell you how to get involved. Let me tell you why you should get involved first, and then we'll get to that. I want everyone to think about some numbers here. All right. 10,000 people, 10,000 plus or more of our people, right? You come in and do the minimum. All right. Now, I know those numbers don't make sense now, but remember, there's 10,000 at the minimum, because I can't tell you any of the terms on video on what the offering is. Just think 10,000. I need 10,000 of y'all to come together hard, strong. You can come with the minimum or more. You do more, it's more powerful, right? To get involved, you're gonna go to True Crowd. True Crowd, the link should be, Brother Sharif is gonna put the link down in there. You get involved that way, register for your investment account, and support this historical movement to the New York Stock Exchange, because we need to be the second. We need to be the second black-owned, controlled company to be listed and traded on that exchange without using an investment bank or venture capitals. See, this is the proof that this is crowdfunding in its purest form. No VCs, no investment bankers. In its purest form, that's what crowdfunding is. That's what co-opinomics is. And when you make your investment, you get membership. You're gonna get partial membership based on, look at the terms over there and break that down. You'll get membership. Okay. And after you do that, you want to continue. You go to the YouTube site. This YouTube site. Go there.
What's your YouTube channel called, Tanen?
Co-opinomics.
Okay.
You're gonna find me. You're gonna find co-opinomics. You're gonna find everything. That's what it is. It's branded all the way across. I'm gonna embed in co-opinomics, and you're gonna know that's for us every time that you see it. You go to that YouTube channel. Those videos are there. And if you can't invest, if you can't invest, you can't afford what the minimum is, man, donate on those channels, man. Put them couple dollars there. You know what I'm saying? And donate in and help build it. You see what I'm saying? And then you can probably earn your way in. You see what I'm saying? Just because we're watching that. Or subscribe to the channel. When you subscribe to the channel, get you a subscription there for a few dollars. Work your way in there. There's all kind of ways for you to get in and work in to position yourself, because if you don't, what's going to happen is, as we grow, the prices are going to change. So you want to make sure that you got yourself in that foothold, in that door, to save your place before these price increases. So as we move to each level, that's what's going to happen. So, and there's videos on the website, ccg.coop. And if you see that the co-op, you see the domain is co-op, that pretty much means that we are part of an international cooperative ecosystem. Only co-ops are allowed to have those domains. So when you see that, you know we're part of a giant network of cooperatives. Because it's strange how cooperatives are not acknowledged in a way here in the US versus the way that they're acknowledged overseas. That should tell you something right there. You see them over here in the US, but there's no financial cooperative in the sense of the way that we're doing it, to where everything is of the people. Now, remember, when you get equity, you do have those. Yeah, you're going to have those voting rights. Those rights are there, and that's what you were talking about earlier, Sheree. Yes, you get equity, and you have those voting rights, and those voting rights are not on everyday operational things, but major material changes that's going to affect the value of the people's shares in any capacity. That's when a vote takes place. You see, man, on critical things. We can't take a vote for everything. I got to run the company and do my job because I work for you. Understand it. I know that sounds funny. I'm the founder and the CEO, but I work for you. You damn right I work for you. You see what I mean? I'm responsible for over 405 families now, y'all. Just last year was only 27.
I was going to ask you, like, how many people, like, how many families or people are actually, involved? Because I know you mentioned that you got things started in 2017 as a fresh company, and I'm assuming that it was just from that period 2017 to 2022 or 2021. Just a lot of groundwork, I'm sure.
Yeah, there was groundwork in there before. Yeah, there was groundwork before I even positioned, because what we spoke about earlier about the challenges with these different funding portals,
right?
And their venture capital methodologies. Yeah, I was getting trolled a whole lot because they couldn't they couldn't manipulate what I was doing because I already knew what they were doing. So it was kind of hard to access them because they couldn't get any capital out of me because I spent my own money. You see what I mean? I developed everything. I put all the money. We're a debt-free co-op. What company can you say is debt-free? You see what I mean? And we will continue to, and see, in debt, we have to remember about debt. There's two faces of debt. There's good debt and bad debt, and you have to know the difference between that. So when we do decide to carry debt, it will always be good debt because of the rate. But the only way to get the good debt is that we have to get to the New York Stock Exchange. And again, I don't want to go into that because there's videos involved with the relationships on but I will say this, right? You know, there's a depository. Everybody knows there's a depository, Federal Reserve, to deposit checks, and the Federal Reserve notes, what we call currency, which we call cash, which is not cash, right? You know, there's a place to deposit that, right? So there's also a place where you can deposit securities in a financial institution, but they never told you about that. That's the reason why.
Workshop.
Yeah, you find well. It's some of it's out there, but yeah, it's in the videos and stuff like that. But see, that's the key component right there. Why you going to banks and trying to qualify for a loan? I've created my business, created the stock. Then I'm going to register that stock by getting a CUSIP number. Once I get that CUSIP number, then it's eligible to be deposited into a financial institution that only deposits securities. Let that sink in for a minute. That's what I mean by when I say that we are writing our own checks. Ain't nobody writing our checks because we created the asset. And there's a process to where you have to register that asset so you can utilize that asset and prep it in the pre-market before you're able to list and trade it on the retail market. This is what they're doing. This is not what's being taught.
I really wanted you to definitely come on and let us know what's going on, because we're reading about it and we hearing that you're getting a strong buzz, but we wanted to make sure that we could do what we can too to help people out there, and I'm sure the audience that is listening, they're intrigued, that they're going to want to, know more and learn more about this. And you gave us the appropriate channels. We'll link them too. For all those that are listening, we'll link those channels here as well, so you can hear from our brother. Obviously, when you join too, because you see that he's holding back. So when you join, there's a lot of information that he'll, be able to, give up or relinquish to us and teach us, so that we can know more about the investment process and the best ways to leverage, our dollars, right? And, and I'll say this, I know, and I appreciate all of you brothers who are in the real estate industry, because, for us as a people, majority of us are living paycheck to paycheck, majority of us. And one of the largest expenses for a household, or the largest expense in any household for most households, is their rent or their mortgage. So this is the real estate. After that, you're looking at either the car note or you're looking at groceries, right? And I'm seeing members in our community, taking advantage of these new bills that are being passed, that I think that are a blessing for our community if we leverage them correctly, as you mentioned here, so that we can then not just constantly, as we've been doing since we've been here, taking our funds and much of what we make, give it over to someone else. We'll create institutions that would own the land, that will own the assets to the land.
Exactly.
And that whatever dollar we make from our time spent, then it will go in some form or fashion. It will go back to us. Maybe not us directly, or it will go back to us based off of what you said. It will go back to us directly. We'll have. It will.
Well, yeah, we'll go into that real quick. Well, just real quick, I'll give you that because you're touching on that. See, you triggered.
Well, I'll let you because I know you're gonna do your thing. I was wrapping it up.
I see, but you triggered something though, man.
I know I did. I said, well, damn,
we can't give it all away,
I shouldn't.
Yeah. Well, no, I can't never give it all away because I'm not even on the surface of what it is. Yeah,
well, give it to us in a minute, and then
just to touch on that just a little bit. Yeah. Part of the benefits of the membership, once you're invested, or once you're invested or you're vested, either or. Yeah, we're workshops on that. We're going to show you how to not only just create your company. We're going to show you how to set up trust, how to set up your own mutual fund in that, and create your how to set up your corporate your whole infrastructure for that, to where you're going to transfer your stock in. And you're going to create your own ecosystem where you're paying and you're controlling the credit and the debt within your own ecosystem. When I say I'm going to walk you through that, that's what I mean. And we're going to show you how to set that up. We have things in place for that. So you're able to do that. We'll show you how to borrow against it. We're going to show you how to borrow against it, have the resources for you. Everything that the co-op develops becomes a part of the membership ecosystem. Everything is shared. Once you're a member, all resources are available to this. You see what I mean? You should never own anything in your name, ever. You understand? Never own anything.
So there are over 400 families who've already learned this from you. Yes. They've already gotten in and started learning from you. You gave us how we can go ahead and follow up and get involved and get vested or invested. So I mean, I think we got what we need.
Yeah, I'm gonna leave it at that. But yeah, you shouldn't do that, Sheree. Don't get me started, man.
Nah, man. We appreciate you, bro. That was the point. Like, I mean, that's what we wanted. We wanted to get you going, man. And wanted you to be able to feel comfortable to, to share that with us. And I'm sure a lot of the gems that you gave us, is probably exclusive to, to the membership, but we appreciate it. You actually sharing that type of information with us. And, we look forward, man, to following your process and your progress. And we look forward to not just being invested, but being vested.
So, invested as well. Exactly. And yeah, remember, also when y'all sign up, there is a what do we call it? Master class. There's a master class that we've already recorded. That everything that we just spoke of, there's a master class. There's over 12 hours, and they're all itemized in parts to where you in chapters and whatnot. It's a full master class, 12-hour plus master class on just what we talked about. We got a master class next week just on real estate on Fanbase. Y'all go to fanbase.app, download that, come to the Great Conversation or the Crowdfunding to Wall Street room, and be a part of that. Because the masterclass is only available to members. That means either you get on the vested side so you have access to it, or you invest and get that, get your membership that way. I'm gonna probably let the masterclass be free for for 7 days, available on YouTube, and on the website, so y'all can see it. And then after 7 days, I'm gonna shut it down, because man, y'all better bring y'all paper, because this is this goes into some serious details on what we just spoke about, and I want everybody to make sure that you're prepped. But yeah, go to the site, y'all come on, 10,000 strong, y'all. We've already reached our 400 strong goal. Now let's get 10,000 come and do the minimum. Let's shake up this this crowdfund. Let's shake up history. Let's secure what was taken away from us. Let's secure it and utilize what they used to steal from us and secure it away. Let's buy it back. Like I said, let's buy back our 40 acres and a mule, so we can take that, wrap it up, secure it, and save it for our future generations, and keep them from stealing it the way that they did in the past.
Right. Closing this up, man. Tanen, we appreciate you. We look forward to seeing you, and we'll join the fan base, and we'll post the links below, man. But thank you again. Appreciate it.
All right, appreciate it, man. Appreciate it.